What's up, everyone? It's Scotty with MoneyVest. So today we are going to be talking about PayPal. I've had the time to once again re-listen to the earnings call from last night. It was a very, very long day yesterday. Of course, we had a Fed meeting, we had the PayPal earnings call, we had AMD earnings to break down. So there's a lot that was going on. But in this video, I want to break down some logistical items. What are going to be the things moving forward for PayPal stock? And Alex Chriss, of course, coming on board with his first earnings call, and what was discussed and where the focus is going to be moving forward. And I've got all my notes here that I also want to break down for you guys that are going to come straight from the earnings call as well. So hopefully it's going to be super valuable and insightful for all of you. Make sure that you drop a like and don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the MoneyVest member benefits, including the TradingView charts, the early access to the Pro platform, volatility spreadsheets, intrinsic value spreadsheets. Everything's going to be included with the link down below, and we'd love to have you on board. So first things first, I do want to mention that Jamie Miller is going to be taking over as the new CFO after Gabrielle. She's worked for over 30 years with PayPal, but there's going to be a new CEO coming on board. I think it's going to be November 5th or November 6th. And later this week is when she's going to be taking over. Vast experience working for Qualcomm, working for EY, working for Cargill and General Electric. So I think this is again good repositioning of the overall management team. Alex Chriss coming from Intuit, already coming on board with a very solid, I would say, earnings call last night, kind of restoring a little bit of that confidence and saying that PayPal is indeed a growth company, right? So of course there's been a lot of doubts in recent history where PayPal is done and it's not going to be able to grow anymore. But of course, Alex Chriss once again restoring a little bit of that confidence, saying that, okay, PayPal is a growth company and we're going to make the company more efficient, more lean, more resourceful, and our focus is going to be on profitable growth as we focus more on cost-cutting measures and increasing operating leverage. Those were some of the words, those are some of the things that he mentioned, which I think are spot on. Now, those are still words, right? Action speaks louder than words. So what we want to see, of course, over the next couple of quarters is how Alex Chriss maintains that dominant position that PayPal has globally in the payment processing space, while also increasing operating leverage, making PayPal, again, reaccelerating that growth. And look, the company has been growing numbers, right? It's not like the company has been in decline and everything is, the sky's falling apart for PayPal. No, everything's been growing just in the mid-single digits to somewhat high single-digit numbers. It's just that reaccelerating that growth a little bit more to once again seeing active accounts and engagement and profitability start moving in the right direction. So it's been a very, very interesting business, because it's not like, like I said, it's not a terrible company that everything's falling apart. It's actually a very well put together company, but it just needs the right direction and proper management to make it go forward and accelerate further, because investors believe that it's stagnated a little bit over the last few years or a couple of quarters maybe, because we've seen the active accounts come down. Anyway, let's just go over to some of these things, and I'll go over some of the other comments from the earnings call. So this is going to be the highlights. So he says, and I quote, "My first 30 days leading PayPal have confirmed my belief in the company's strong assets and market position. Now we must harness these strengths and put the weight of the organization behind our most important priorities. In the process, we will become more efficient so we can innovate and execute with higher velocity, and the opportunity to drive greater impact for our customers and unlock profitable growth makes it an exciting time to be at PayPal," is what he says. So revenues did grow 9% year over year to $7.4 billion. Operating income up 8% year over year to $1.6 billion. And non-GAAP EPS coming in at $1.30, 20% growth year over year. So all three things did beat expectations. So like I said, it's not like a dying business, right? I mean, a lot of people think that PayPal is a dying company. It's not. I mean, the numbers are right there. It's actually growing pretty well, but it just needs that right direction to unlock opportunities to grow even faster, grow even better, and focus really on higher quality engagement as opposed to lower quality, which is exactly one of the reasons why they are going through the process of active accounts coming down. So if you come over to active accounts here, you'll notice that in the last 3 quarters, this has been the biggest concern from Wall Street, and how it's been going down from 433 to 431 to 428. But the problem is that this is not a Facebook or a Meta, right? I mean, they don't rely heavily on having significant amount of higher number of accounts, but as long as the existing accounts are engaging well and the transaction per active accounts is actually increasing, that's a much better metric for TPV, which is a much better metric for revenue. And we can see that in the numbers as we go back. Total payment volume was up 13 to 15%, $388 billion, which obviously did result in revenues increasing to $7.4 billion, 8% increase, 9% on a foreign exchange basis. Transactions, 11% growth, $6.3 billion, and 56.6 transactions per active account for PayPal, with non-GAAP operating income of $1.6 billion, 22% operating margin, 8% increase in operating income, and non-GAAP EPS also growing by 20% for the company, with free cash flows also including for a $0.8 billion negative impact from the KKR sale that happened in the I think the second quarter, but then they're also kind of following that up with October 31st. As of October 31st, I think majority of that was already sold to KKR in terms of the receivables. So this right here is going to be the highlight from those KKR loans. Let me just figure that out. There was somewhere. Yeah. But bottom line is I think they have sold significant amount of their receivables over to KKR. And we did an analysis on that in the past. I don't have that screenshot right now. I thought I did, but I don't. Anyway, so net revenues increased 8%. Again, operating income $1.2 billion, operating margins 15.7%. And we got a GAAP EPS of 93 cents per share. And year over year, it's slightly down from $1.15. Non-GAAP EPS $1.30 compared to $1.08 in the third quarter of 2022. And GAAP EPS includes a positive impact of 2 cents from PayPal's strategic investment portfolio compared to a positive impact of 34 cents in the third quarter 22 as well. So that was definitely one of the reasons why we did see a significant increase in third quarter 22 last year versus third quarter this year. Now, balance sheet wise, again, very strong. We're looking at cash and cash equivalents of over $15.4 billion, they basically purchased 23 million shares, returning $1.4 billion to shareholders. And that was roughly about $61 per share is where the average price ended up coming out to for 23 million shares. And in this year, in the trailing 12 months, they've purchased back 75 million shares at $5.4 billion returning back to shareholders. That came out around $72 in average price per share that they've bought back in the last 1 year. Of course, that 1 year, the prices are going to be different because of where PayPal's traded, but that's going to be the estimated number for the price per share. There we go. Cash flows, I was talking about it, and you'll notice that in June 2023, PayPal entered into a multi-year agreement with KKR to sell up to 40 billion euros of eligible consumer installment receivables, and in October of 23, PayPal began selling those receivables, and as of October 31st, approximately 1.4 billion of such receivables, which are classified as held for sale, have been sold to KKR as well. So, because of the significant amount of share buybacks and a little bit of a negative impact on this, we've seen free cash flows come down. So in terms of guidance, they're still expecting non-GAAP earnings per share to be at $4.98, which was actually increased a little bit from $4.95, so 3 cents per share increase in the guidance. And they are expecting free cash flows at least $4.6 billion with non-GAAP operating margin expansion of 75 basis points and growth of about 21%. And third quarter guidance, $1.36 in non-GAAP EPS, 10% growth in the EPS, and 7 to 8% in net revenue growth as well is what they're expecting at the moment. So overall, I would say that the company did report some pretty good numbers, and the guidance was also, again, lifted slightly with Alex Chris restoring a little bit of that confidence, kind of making sure that people understand that execution is going to be very important for PayPal moving forward. We already touched on the share buybacks. We touched on free cash flows, but it's really going to be coming down to moving the business in the right direction, making it more leaner, more efficient, and focusing on higher profitable growth, meaning unlocking opportunities and products and services that are going to benefit the shareholders and really cut the fat, right? Really just cut the cost as much as possible so that they can continue to achieve that operating leverage, which the business so desperately needs to expand margins moving forward. So that's where we are. And I think the earnings call was about 8 out of 10 because Alex Chris knew everything he needed to say. And the numbers itself, I would say, were about 7 out of 10. And the stock price, of course, reacting in that fashion, up almost 6% right now, but it's got a long way to go, right? It's got a long way to go. And I think I really like the line that he said that PayPal is still a growth company, because that's really where the focus is for the business, is to keep it growing. But of course, the price action is still pretty brutal. We're still, of course, trading at, down over 80% from its all-time highs. Resistance right now is going to stay up at 57.50. So that right there is going to be that level to watch as a resistance all the way up to as much as $70 to $71 per share for PayPal moving forward. Of course, very, very oversold on the RSI and the MACD as well. So a little bit of a rebound, of course, on the day today is possible, getting up to $57, $58. But time will tell whether this is only words or whether Alex Chris can actually take action and turn the ship around for PayPal. It doesn't need to turn the ship around. It just needs to steer slightly in the right direction because it's still growing. Like I said, it's still a growing business. We just went over the numbers. Yes, there's puts and takes. Transaction take rates have been coming down. Active accounts have been slowing down. Margins are struggling a little bit. So though there's puts and takes here, but overall, I would say the business on a year-over-year basis is still performed really well on a fundamental level. So let me know in the comment section below, what do you think about Alex Chris and the earnings from yesterday? And do you believe that this is indeed going to play out the way we're expecting, or whether Alex Chris, of course, the words is what he mentioned, but action speaks louder than words, like I said, and that's really what's going to matter over the next 4 to 6 quarters, and for us to see whether, PayPal can be profitable, right? It can continue to grow in a profitable fashion. So again, hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.